Malaysia's Prime Minister wants to reassure the public. Najib Razak announced a budget last October. His government is now readjusting the budget for this year. Malaysians are worried about the falling global price of oil and its impact on their oil-producing economy. And the Prime Minister wants to make sure those worries don't turn into panic.
I'm here today to announce specific and proactive measures to align ourselves with the recent global economic developments. We are not in crisis. Indeed, we are taking preemptive measures following the changes in the external global economic landscape, which are beyond our control.
But there was no specific announcements on changes to the tax structure or subsidies on fuel, as many here had expected. He also said the government would suspend military recruitment this year, saving $112 million. The Prime Minister also encouraged Malaysians to buy locally made products and waive visa charges for tourists, notably from China, to stimulate the economy and attract foreign tourists.
Yeah, it's quite a hard time for the consumer.
Store manager Mr. Su has noticed it in his sales. He says his local customers still feel there is uncertainty in the market.
And because of the valuation of our ringgit, a lot of people are concerned. So from that, they refrain from buying more. Not like previous, they buy and they keep it, now they don't.
Malaysia is a major oil producer. 30% of the government's revenue comes from oil sales, funds that support its policies and future plans. Fuel subsidies have slowly been reduced. That means Malaysians will pay more for petrol and will have less to spend on essential items. This analyst thinks the government is making the right decisions, but needs to be careful.
I think the Prime Minister has come across to show that the government is not panicking, that the government has a plan to deal with the slide in oil prices and is tailoring its spending accordingly. But I think there's a sentiment that the cuts are not going far or deep enough.
The Prime Minister has had to rethink government spending. The devastating floods that hit northeastern Malaysia last December displaced as many as 200,000 and caused millions of dollars of damage. The rebuilding and rehabilitation of the region may cost the government an estimated $250 million. The Malaysian government needs to counter the falling oil price and rebalance its books. If it wants to see its policies implemented, then this won't be the last that we hear about budget cuts or tax rises. A new general service tax of 6% is due to be implemented in early April, and everyone will be affected. It's the public's long-term reaction to these changes that the Malaysian government has to be sensitive to in the next few months. Sahil Rahman, Al Jazeera, Kuala Lumpur.